Robschild. No investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing in that specific order. Today is Monday, January 13th, 2025. In today's episode, the monthly U.S. federal budget report is missing. I can't find it anywhere on the government's own websites, nor the Fed websites. It can help guide investors, including myself, knowing, what the federal budget is, how much they're spending. This is for December we're looking for. Also, notably, tomorrow we have PPI coming out, Producer Price Index, and Wednesday, the CPI report, both very important inflation gauges. No major updates in the daily reminders. Watch Macro Update 11025 with dominoes in the ball to hear me read through these extremely important things for any serious investor. Equally, no major changes in the crystal ball ratings nor Robschild portfolio, although I am moving bit by bit from cash into more long duration, still buying. And at this time, purely TMF. On to the charts, the S&P 500, any way you look at it, it is a head and shoulders top, and we broke the neckline, and we are headed lower. By this pattern, it looks like we're headed to the 5,600 level with strong probability. As long as PPI and CPI don't surprise the market too much, it's where the direction is headed. We have some momentum and chart patterns telling us that we're headed there. We have the VIX making higher highs, higher lows, going above the 20 level, which I talk about sometimes, and settling today at 1919. Mr. Market is getting more fearful here. The dollar seeming to want to push higher. We had in the middle of the day, intraday, we had over 110 in this index. This is all while there's all of these other, world global currencies that are collapsing, and, they got to pay off their dollar denominated debt, and, some of them are selling treasuries. That's part of the reason why treasuries are selling off, is actually to raise dollars. And if you're selling treasuries right now, you're probably selling them at a bit of a loss, and to people like me who are buying them with leverage. But I digress. As much as you will hear and continue to hear people pounding the drum and saying inflation is coming, well, the dollar is going up. I don't know what else to say. TLT, my favorite place to be. We're sitting around the almost, we'll call them for all practical purposes, near all-time lows. Not exactly how it works. But, with the 20-year bond yield getting to about 5%, poking its head a little bit above that a little bit here. We're in that range. We're in that, me and every other person on that's looking at this is, would be flabbergasted to see TLT continue lower and long rates to continue higher from here. So we'll see how it goes. I'm happily adding to my long duration treasury bonds myself. I'll add to this that if TLT bottoms where we are right now and goes back up, which is expected by a lot of people, we're currently at that 5% level on treasuries. The 20-year at least. We're still, the 10-year still has some room to go. So we ended today at 4.8. We're not quite up to that 5%. My chart got all messed up here. Okay, that's better. So the all-time high of this of recent modern history, in October of 2023, that 5% yield, it looks like it still wants to go there. All while, again, like I said in the last show, the 20-year is kind of bumping its head. Point of all of this is that if and when longer yields find their peak and head down, everybody's saying the same thing. They're thinking that that's going to give a push to the S&P 500 to allow it to go higher. And yes, that can happen. And there will be a point, and there will be a point, and I think it's coming soon, where the market realizes that the Fed is going to give more candy sooner, and that's not enough to keep things going. And that's when you have a scenario where stocks are actually collapsing, and treasury yields are also dropping. That will happen eventually, and I think it's coming sooner than everyone else out there thinks right now. But remember, guys, you're just watching a guy literally with a crystal ball talking about financial markets. So, you know, do your own homework, make your own decisions and indecisions with all of your opportunities. That's not just, some kind of way for me to protect myself legally. It's, you know, you are responsible for all of your choices. Be prepared to be wrong always. Anyway, as it stands, we're at the part of the cycle where we're still pushing the cut further away. The highest probability of the cut by itself is pushed out all the way to September. I think Friday that was in July or June. Yeah, I think it was June on Friday, so pushed out 2 more months. But the truth is that there's a high probability of actually still cutting in June, because what you have to do is let me zoom in a little bit. You have to add these numbers on this side up, because this that 10% is 2 cuts. So you add that to this one to get at least 1 cut, and there's only a 43% chance of no cut by July, 48 by June. And so it's still expected that June should be the first cut. It's a little confusing how this works. But the bigger point is that the Fed funds futures is now pricing more hawkish Fed for longer here. And that's off the back of the employment data, obviously, on Friday, having a little bit of follow through today, I guess. In a way, it's almost like the market is preparing the CPI to come out, and PPI reports this week, tomorrow and the next day, perhaps to come out hotter than what had been previously expected. I need to bring up crude oil, the price of crude oil going higher today. I guess there's some news out of Russia, something to do with sanctions, or I don't know. There's all sorts of stuff going on over there. That's what some professional traders are regarding as a temporary headwind to, or I guess tailwind to, the price of oil going higher here, because it'll potentially, squeeze the supply a little bit, at least temporarily. I watch Gareth Soloway on his show. He's adding to shorts here, and so he's expecting it to go down. If that's the case, it would be good for, my bond position. I just hope I get enough in, before rates do collapse down. I have, again, I'm almost 60% now. I keep adding more. I'm around 58, 59%. And I'm putting everything that I'm putting in right now is going straight into TMF, which is the most leveraged version of, an ETF that you can easily get exposure to, benefiting when long rates go down. And long rates, like I'm saying, they follow oil prices. So if oil prices, once this Russian thing is over, I expect this to drop back down, and perhaps, finally break this trend line that we've been banging our feet on, stomping our feet on, I guess we'll say, for a while. Will this be the final driver to head things lower? I think it will be, but that's just me and my crystal ball. A few other charts caught my eye today. Main one for me is copper. As I have been talking about, I thought that this was a Head and Shoulders that retested perfectly. I was like, oh, for sure this is going to go down. And it was only an 80% chance. So we rolled the dice and we got the 20% chance here as far as chart patterns go. My understanding is it has something to do with some copper mines being closed or something like that. I don't think copper is going up because of China. Usually China is a pretty big influence on the price of copper. I'm not I really don't know what's going on here, but I do find it notable that copper has gone up pretty strongly from a low of $404 to now $4.34. Bitcoin had a heck of a day today, dropping all the way down. What is the? Let's see. Let's find the number. The low, below 90,000. So 89,164. So and there were a bunch of people looking at that 92,000 level, like me, and being like, "Oh, for sure, it's just gonna crash now." And what happens? Well, everybody. Uh, a lot of people got stopped out of their shorts, and it went straight back up. As it stands, you know, the the most psychological the way most people look at Bitcoin is going to be on a daily basis, a daily candle basis. Right now, as I am recording this video, we still have 55 minutes left on the clock for UTC time, and it does not look like it's going to close below that 92,000 level, which means, again, Bitcoin it can do anything from here. Once we get a solid close below this, and maybe even wait for a confirmation and a rejection, that's when we can expect to drop down to that. I think it's 75 to 80,000 range. And I follow various charting methods, various people that do different methods using Bollinger Bands, moving day averages, and then just head and shoulders tops and other trend lines. They're all saying the same thing. It's like 75 to 80,000 is the expectation if it gets bearish here, which it doesn't necessarily have to get bearish here. Again, the CPI report, if that comes out like super hot, and then people like start getting worried about the dollar, and inflation and stuff, it could be a big tailwind for Bitcoin at here, sending it much higher. I really don't know. A little too foggy for me. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.